Welcome to the Trading Zone. We got a great show scheduled for you ahead as I'm hearing an echo because I got the YouTube page up. Okay, so let's start this over. Welcome to the Trading Zone. I'm Joe Teague at Equity Armor Investments. With me is Brian Stutland, also portfolio manager at Equity Armor Investments. Brian, how are you doing?
Good. Yeah, another week in the markets here. We're now into October, which is always a scary month for the markets, but they just seem to be powering through and feels like markets are never going down again. Of course, that's not always the case, but it feels like that euphoria is still going, right, Joe?
Yeah, never going down again. And there's been a lot of talk about a bubble. Remember, stay with us, stay connected. Make sure you check out our website every week often. You'll see articles like this, which we put out this morning. We're just talking about the market here, but I wanted to focus in on gold. Stick around through the show. We're going to be talking about gold later in the show. Gold, to me, if you're looking at some advanced options metrics, looking a little bit more bubble-like, and that's kind of what I want to focus on because we remember as advisors, we remember as just market participants previous bubbles, and it doesn't seem like a bubble in the minute because everybody is just euphoric about this amazing asset that just keeps on going higher and higher. When nobody thinks it's going down, that's kind of when it's a bubble. When people are worried that it's a bubble, it's not quite a bubble. I think gold is kind of like that right now. Everyone loves gold. They're going all in on gold. Maybe there's a huge blow off top coming to the upside. Maybe there's a lot of short-term gains in the upside in gold. But I'm just watching because I think when gold fizzles out, that money is going to come back to equities, and we're going to start to see more appreciation in equities as that happens. But as we go on here, let's look at the next segment of our show. Now, Brian, we're former VIX options market makers. We love to look at volatility. We look at volatility every week here on the Trading Zone. Here's what's happened so far in 2025 for the VIX. We've seen a lot of spikes here, but really most of that was kind of in the first two quarters of the year. The last quarter, relatively quiet in terms of volatility spikes. We're waiting for this next volatile action.
Yeah, it feels like there's really nothing that's going to cause this volatile action other than the fact that the market has been so far extended for so long, and we really haven't gotten anything to cause it a spike. And, Joe, as we know as traders on the floor, that it's only a matter of time before that volatility spike happens. Sometimes it comes out of nowhere. Sometimes you don't really know kind of where it's going to come from. And then all of a sudden we get some news that starts to turn, what was once a euphoric market into some negativity and catch traders off sides a little bit. So we're probably due for something like that. I haven't seen anything yet that's going to give us that volatility bump, but certainly maybe that volatility bump is just to the upside.
Yeah, and one super interesting thing we got to just highlight here is that the last 3 days, we had the market higher and the VIX higher. So this is kind of people prepping for some downside here, even though the market's going higher. So when I see that, sometimes that downside's hard to come because the protection's already built in there. So that's something we'll be watching. Another thing we've been watching for several weeks here, Brian, is the volatility of the bond index. And this just continues to be a green light for equities, liquidity flooding the system. As we've talked about before, the lower the MOVE index goes, the higher the price to earnings ratios go for the S&P 500. So this is just great news for bulls.
Yeah, I mean, if there's no ripple, like bowling ball being dropped in the pool on the bond side, the ripple effect in the pool, it's a pretty calm waters. It seems safe to kind of jump in the pool, jump in the lake. No rip currents here. Bond market acting very calm, and valuations, like you mentioned, I believe will take the market higher.
Yeah, and like we saw in the VIX here, Brian, the skew index kind of doing the same thing. Maybe in no man's land here. I think we got like a low end of the range here and a high end of the range here for the skew. Kind of in no man's land here, just kind of waiting for the next move in the market. And really, I think this is just fine for the status quo, just like a melt up market where people are continuing to watch these prices get higher. Nobody wants to sell assets right here because they're expecting to go higher. But at the same time, people are concerned at these valuations, concerned about maybe next year's growth and are buying some protection. So that's just kind of the dynamic we've seen for some time. It's really good to be a volatility trader who's long the market and long volatility. It's a fun way to be trading right here, Brian.
Yeah, I think the institutional trade has been, as the market goes higher, rather than like you mentioned, sell out of a position, just buy a put. Hopefully, it goes out worthless, and that's probably why you're seeing the skew index here tick up. Make higher lows going back, now a year and a half. Kind of makes sense that it's just to sort of ease up on my delta exposure to the market, I buy a put on the S&P, and that's probably created some level of tilt in the skew. But yeah, looking at the futures curve here. Um, it's kind of interesting that a month ago we were actually lower in volatility than we are today. So if I'm looking at mean, if there's a really big bullish scenario, mean reversion, that the VIX and the whole futures curve could get kind of pulled down a bit back to where it was a month ago. We're actually kind of elevated from there, surprisingly, to the point of market up, VIX up that we're seeing. So that might be one bull case scenario that keeps the market going, is that we've got this mean reversion. To get that, you would need probably the market to rise and VIX and volatility to come off a bit.
Yeah, but it's interesting though. You look at this spot in the curve a month ago. Uh, these futures are a little bit higher. So yeah, this is just kind of a flattening of the curve. People are seeing higher volatility. The futures almost had this spot on in the back end of the curve, and now we'll see what happens next. For me, seeing this flat spot here, we have basically the cash and the front month future, not a lot of distance there. That's going to be some volatility for these futures. So it is possible we could get a surprise uptick, and these futures are going to really go up quickly, or like you said, a little mean reversion, and the futures, I think they'll be a little sticky coming down until expiration.
Well, that wraps up the volatility portion of our show here, where the VIX experts from the trading floor is bringing you expertise in that area from Equity Armor Investments. But now, Joe, let's turn the page here. Let's get in sort of the macro picture of what's going on in these markets the week ahead. Government shutdown, obviously, an important issue here. Gaza peace talks, maybe bringing some calm to the commodity market. FOMC minutes will probably give us some indication on what's coming up next. And then, China holiday market close. Actually, don't sleep on that, actually, because, and then you've got Columbus, or Indigenous Peoples Day now, I guess that's what it's called, coming up next week. And so that, maybe decreases some volatility in the marketplace. So, but, in this segment of the show, we like to get into how this macro picture is playing out, how that's going to affect the big major indexes going forward. Joe, what are you seeing?
Yeah, and the big story here, Brian, is we're going to look at all these charts. And the big story is people are calling this a bubble. We're going to get to gold in a little bit and kind of look at gold compared to the markets here and see a little comparison. We've been following gold for a long time. We've loved gold, Brian, for a long time. We've been bullish on gold, getting into it early last year, talking about it for some time. Now that we've had this run up, I just want to compare it here. So here's the S&P 500. Yes, we're hitting all-time highs. Yes, we have PEs that are, in the higher areas here for PE ratios. But we're just kind of running higher, and it just seems like green light here. There's really no stepping in front of the Fed here. Essentially, is the Fed saying that they're going to focus on the jobs component rather than the inflation component. NASDAQ again. Another chart making new all-time highs. Now, if you want to say a little bit of bubblicious action, AMD price higher this morning, 30+%, maybe 27%. Semiconductors absolutely breaking out here, but they had been more sideways if you bring this chart out a little bit further than the S&P 500.
Yeah,
so
I don't actually know if that's like bubbling out. I actually kind of see the AMD news. OpenAI cutting a deal to take an equity stake in AMD and also start to purchase their version of chips. To me, this is the partnership growing out, trying to drive down costs of their CapEx spending that they're going to have to do to continue to build out their LLMs and expand that AI build out. Looking for different partnerships. Maybe this is an indication that OpenAI kind of wants its own kind of chip version of things to work with AMD on it. So that SMH breakout, you typically a bullish sign for things for the rest of the market going forward. We got Bitcoin higher as well. So, these couple of things as leading indicators are probably pretty bullish for the overall stock market.
100%. By the way, stick around to the end of the show. We'll be trading Oracle on similar news to AMD. today. Oracle had a big spike higher earlier last month. We traded it then, sold the put spread. Now we're going to take advantage of it, and I'll break that all down later in the show. But as we go, yes, just a big run up here, but it's not really showing up in bubblicious way. Here's like the Mag 7 index. Yeah, we're appreciating here, but I want to just like remember refreshing this chart. What happened in the late 90s? We're continuing to go higher. Yes, it seemed like a bubble for a lot of people here in 95 and in 96, but this is what really happened at the end. That's really what bubbles seem to happen to me. Bubbles just kind of inflate. It's slower, and then it's going to rapid expansion when everyone is just piling in and saying, I need this now, and they're fighting each other to get in, and you see a big rapid increase, which of course we've not quite seen for equities yet. And for me, I've been saying right now it's all about currencies around the world, not only the dollar just devaluing. And yes, people have been saying, hey, these currencies have been devaluing. I need to get into gold. So here is gold. Here's its price right now. It's absolutely starting to look parabolic. There potentially could be a big move again, still more higher upside here in gold. Just kind of following this very closely. I think this will eventually blow off. And finally, Brian, here, bring you back to options, bring you back to our world here. Let's take a look at the put and call volume, GLD. That's the largest gold ETF. We are getting spikes in call volume here for gold. So there is a ton of people chasing this move with the upside call purchases.
Yeah, when people start to chase like that, I mean, look, in the commodity world, you do see the upside call being bought in sort of a panic melt up situation. Vice versa, like the equity markets, you typically see a panic buying of puts on the downside to the market. So the opposite kind of happens in the commodity world. We're starting to see that. That could indicate some blow off toppiness. I think if we look at like the prior leg up to this sort of plateau flat line, right around 3,500 in gold, though, I kind of feel like maybe there's still a little bit more move up in gold here. Typically, when you get these blow off tops, what I like to see is like a double toppy formation before I'm like, okay, I got to get out. And I'm probably going to have to take a 10% haircut on where I get out. But until I see the double top, I kind of like to stay with it and let it keep riding.
Yeah, 100%. I'm not saying that this is about to pop here in gold, but I'm just saying, be watching this closely. If we get, maybe another, maybe it could be as much as 20% or 30% more to the upside, and then watch this turn over here. Because I think that's going to be like the one that does happen. People will be saying, all right, where else can I turn? Gold's already had its run up. Where's the next thing to park my money? Because I can't keep it in cash. I can't keep it in pounds or euros or any other currency. Where else can I park my money? I think people look at more risk assets, looking at equities at that point in time. But one thing, one commodity, Brian, wrapping this up here, that has not run away has been oil. I think that's actually good news for stocks, of course, and the Fed. I think this is the most important chart for inflation. We're not really going to get a lot of government data for a while, but watching the crude price will tell us, is inflation running away? Are we in serious trouble here? And it's not. So that's good news for the stock market, in my opinion.
Sure, it sure is. And hopefully these guys at peace talks continue and they move forward and push through on what's been put on the table. It'll be great to hear that. That probably is why you've seen this drop in crude and, hope mitigate some of that risk of oil prices as well. So this has been a really good portion of the show here. Just we've talked about AMD. You have that pop right there. Is quite interesting with their partnership with OpenAI. I think what will be interesting here, Joe, is every week we get into our trading zone segment that we put on, you and I, Equity Armor Investments, the trading zone. You can go to equityarmorinvestments.com, check that out, subscribe to that newsletter, that copy version. We give a trade of the week. And Joe, I want to get into that right now. Our trade of the week.
Investments.com and go to the trading zone.
There you go.
Subscribe now. So here's the trade of the week. Yes, this is kind of an example trade. We've seen this huge run up here, 30+% in Oracle off the open, a little bit less right now, but it's just a huge jump higher. A lot of people will say, "Oh, well, I'm just going to run in here and snap buy AMD here. What could possibly go wrong?" Well, of course, people said that here in Oracle. This was just a huge run up here, and what did we do? We gave an example trade at this time. Brian, we sold the 280 put expiring in October, bought the 260 put. We collected about $5, less than $5. And we have seen Oracle come collapsing down kind of 290 plus here right now. We are still up on that put spread, even though if we had bought the stock, we would be way down on owning that stock. So and that's still a level I want to get in here, but I'm looking at this price here and looking at the news for AMD, and I'm getting kind of excited. So the reason why people were bearish on Oracle after that huge announcement, of course, was they were saying OpenAI going to spend $300 billion on data centers. I don't believe it. OpenAI is not that big. They don't have the capital. They don't have the bandwidth. They're not going to need all that. So people were saying there's no way that this is actually going to be materialized. The cloud business for Oracle is not going to be able to compete with the Microsofts and Amazons and Googles of the world. Well, I think this news kind of solidifies it. I think it's just like low key, like huge for the AI trade. I'm thinking OpenAI is like Amazon in 1996 here. It's like a massive behemoth company. It's a private company. It's just going to revolutionize the stock market, and it's going to have filters all around. So yes, I think this deal is real for Oracle. I think Oracle has, because of this deal, they're going to be able to be a big player in the cloud business. They also are going to be getting cloud business from TikTok. So I am all in on Oracle here. I think it's going to reach all-time highs by December, and I want to set up a leverage long trade. Brian, what do you think about that thesis?
Yeah, I mean, I love it. I'm long the stock personally. I use options here and there to sort of enhance it. And this is a play where I think there's some continued upside opportunity once we sort of get through this little consolidation period, probably from all the, euphoria of the stock pop after its last earnings. Sometimes it takes a little while for things to sort of catch up to each other. So, Joe, how are you playing this options trade to the upside?
Yeah, I am thinking by December expiration, we're going to be back at all-time highs. That was 345. So I'm going to buy the 340, 340 call spread. And I will finance that, Brian, by selling the 280, 240 put spread here. So potentially got $40 risk on to the downside, $40 of gains up to the upside. I'm going to collect some money to put it on, of course. I feel very good about this 280 strike here. I feel if we get to 340 by December, it might be a spot I might want to get out of my gains anyways.
Yeah, and I would say maybe just the one enhancement to it is like if I wanted to get more upside participation, I didn't want to sell the 340 call just yet. I might just buy the 300 call and finance it with selling the put spread on the downside. Now, obviously, I turn the trade in from collecting 30 cents to probably paying some money. But then it doesn't cap my upside in case this thing really does go higher by December. And, it is interesting, like selling a call on the upside and all these like AI tech stock names, you sometimes get caught off sides a little bit. I like to see the market in general sort of move higher. Sentiment maybe starts to slow down in the stock market. Now some of these AI names can kind of settle in. That's maybe when I would sell that 340 call. I would wait for that to sort of happen, get the move up higher before I sell the call, kind of leg into that spread.
Yeah, that's another way to do it. I just like the finances of outlaying zero cash to get into this trade. If we don't trade above 300, I'm still going to be a very small winner as long as we're above 280. So I like that component of it, just kind of drawing a line in the sand here at 280, saying here is where I want to be long. I'm happy to be long here, which is great. And of course, I'm going to get the real appreciation above 300 through 340. I 100% agree. If we get through here, this 345 area, we're going to be going to new highs, of course, but I'm thinking maybe we might get a little bit of this action first.
Yeah.
So we'll see how that plays out. But boy, I'm just a big fan of OpenAI. Just what they're doing. It seems like they have a lot of access to cash. A lot of they're putting it to work very quickly, and they're making deals, and they are, not resting on their lead in the LLM. They are looking toward the future here, and that's what you want to see a company be doing. Now, it's, of course, a private company. It's not a public company. I imagine at some point they will be going public. If we're following the bubble of 95 to 99, that would be like Amazon in 97. Right now, we're at like 96 or 95, late 95 area in that parallel. So maybe a year to a year and a half, we can see an OpenAI coming public, and I think the market's going to rally right through that and just kind of build it on, and you're going to see a lot of other copycats, a lot of other companies, maybe like Perplexity, companies that are going to be also going public, and at that stage, we can go back to our bubble talk, and everyone's going to be in love with these companies. Everyone's going to be saying, hey, I got a second mortgage on my house and I triple long SMH. Like, is that a great idea? At that stage, you could be saying, hey, we might be in a bubble. Right now, we're at the stage of everyone saying, hey, we're probably in a bubble. We're gonna collapse soon. We might not be, given that drop back.
All right, guys, this has been a great show. We've put a lot out here for you. Take a look at these AMD movement that we're seeing today, but especially our trade in Oracle. Make sure you go to equityarmorinvestments.com. Check out the trading zone section if you'd like to subscribe to our monthly trade alerts and get that dropped right directly into your inbox as this happens. We obviously provide updates too to stocks as the markets change and move, other than just our weekly pick on the show. So make sure you tune in and subscribe to that, but make sure you subscribe here. Follow us on YouTube at Equity Armor. Follow myself at Brian Stutland on X and at Joe Teague as well. We'll tune in every week here. This is our new time slot. Have your lunch. Listen to what we got to say. We try and make it short and sweet and to the point. Learn how to risk less and make more. Tune in every week at noon Eastern every Monday. We'll bring it to you here for the Trading Zone. This is Brian and Joe signing off. Talk to you later.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.